Hello, everyone, and welcome to today's webinar. My name is Julie Muhn. I'm Senior Research Analyst with Finovate. And today we have a webinar hosted by Quantify titled Enhance Customer Lifetime Value and Optimize Operating Efficiency in Mortgage Processing. Our speakers for today are Sanjeev Sethi, Head of Banking and Financial Solutions for Quantify, Vijay Mannur, Head of Marketing and Analytics for Quantify, and Milind Wasaikar, Client Service Executor for Quantify. All right. So just a quick housekeeping note before we jump into the presentation. We will have an opportunity for a question and answer session at the end of the session. So feel free to take note of your questions or submit your questions in the chat box. And the team will be addressing those questions at the end of the webinar. Additionally, we'll be running a few polls throughout the webinar, so be sure to keep an eye out for those, and you can make your voice heard with those. With that, I'd like to pass things over to Sanjeev.
Thank you, Julie. Good morning, good afternoon, good evening, everyone, wherever you are. I'm going to just start quickly by sharing the agenda and then jump right into the content. And I have speakers Vijay and Milind with me, and we are going to sort of interact as well as sort of give you the information about what we believe is going on in the mortgage processing industry. So first, again, quick introduction of Quantify and what we do in banking and financial services practice. Then we are going to talk about what is AI-first digital engineering in lending and what's the need for that, right? Why is it now so much important? Then within the AI-first digital engineering in mortgage processing, there is an element of customer and marketing analytics, and then there is an element of document processing. We also call that intelligent document automation. So we're going to cover that. And then finally, to help everyone with the challenges of where do we start from, we are going to talk a little bit about how we approach this as a problem in the industry with our clients. So jumping right into introduction of Quantify. As a company, we started in 2013. We were born in the cloud. We are the AI-first digital engineering firm, helping our clients implement data modernization as well as AI solutions across the industry sectors. So we have operations in banking and financial services and insurance, healthcare and life sciences, and all the other leading industries, with banking and financial services our largest vertical when it comes to the size as well as the number of clients. We are a global firm. We service our clients across these sort of regions. Headquartered in Boston, we have our delivery centers in India and offices in all the major cities in the globe. Because of the services that we have provided to our clients and the value that we have delivered, we have received a number of industry awards ranging from Nelson Hall, awards in banking, as well as leading wealth and financial services firm. And when it comes to the specialization, we, on the one hand, help with the data plumbing issues and modernization and bringing that into the cloud, as well as modernizing in on-prem, and then helping apply the data for analytics and AI using custom ML solutions, conversational AI solutions, document processing, which we are going to cover in this webinar today. And for the plumbing part, we help with the cloud modernization, infrastructure modernization that helps our clients get ready for applying AI and machine learning in their businesses. Obviously, as we do that, we bring a number of accelerators as well as productized solutions from our side, which help accelerate the journey for our clients. We are partners of major cloud providers, Google Cloud, Amazon Web Services, and also we work with NVIDIA and Snowflake quite closely. So jumping right into what we do in banking and financial services, leveraging the AI-first digital engineering approach, we go after each of these stacks within the sort of digital ecosystem, right? So we start with infrastructure, go into data, intelligence as well as automation and engineering. And within each stack, we help our clients implement solutions that accelerate their digital journey, right? So very quickly covering some of them. How do we impact experiences for the clients, customer journey? Taking the example of mortgage, which we are going to talk extensively today, we help clients implement hyper personalization to be able to reach out and make sure that we go along with customers journey and provide products and services that will help them with their needs and understanding their needs better. We also help clients with implementing the virtual agents. So there's a number of banking and financial services clients we are working with, helping them with custom conversational AI solutions across the cloud. And when it when it comes to automation, it's all about speeding up the processes, because traditionally mortgage processes have been quite slow and inefficient from operating standpoint. So we help automate the workflow, and within the workflow we have the document automation tools that leverages artificial intelligence, natural language processing, and computer vision technologies to be able to extract information from documents as well as classify documents, which basically shorten the timeline for the entire processes. Analytics and insights, that's the other thing which we are going to cover today. How do we drive customer and marketing analytics to be able to improve the customer lifetime value? How do we help our banking and financial services clients apply AI ML technologies to be able to improve customer acquisition, to be able to retain customers? That's something which we are going to cover today as well. And again, as I mentioned about the data plumbing and the cloud infrastructure plumbing, that's something which we help our client bring data from on-prem into the cloud, as well as sort of implement data lake, as well as the data warehouse solutions. Moving on. So here's a quick poll for all of you. Would love your views on how the mortgage industry is doing today, right? So from the way it had worked, post-COVID, mortgage demand rose, both the refinance as well as the new mortgage, and then obviously interest rates started rising. So it was about 4 trillion in 2020, nearly about 4 trillion in 2021 as well. But it's expected to go down this year because of various reasons, which I'll cover a little bit. Do you think it's going to keep fluctuating, or how is it going to work? So this is very interesting. Well, it will definitely remain unpredictable for years to come, which we understand. But I think the right answer is that it will plateau at $2.6 trillion, because what we are expecting is that the refinance is going to go down because of the higher interest rate, which I'm going to cover a little bit more into detail. So but again, it's a prediction, so it can remain unpredictable as well, given nobody knows how the interest rates will behave and mortgage rates are going to sort of evolve. So thank you for the poll. Moving on to so what's going on in the industry right now, right? So after the COVID, mortgage rates have been favorable, housing supply have been sort of down. With these kind of rates, demand for both new mortgages as well as refinance went very high, and obviously that increased the prices of the houses as well. So what we are expecting is that right now, as we speak, right, the mortgage rates are fluctuating quite a bit, sitting around 4%, and it also popped up to 5%. So it's somewhere in that range. 30 years mortgage I'm referring to. And as we sort of progress, what we are seeing is that despite of the mortgage rates, the housing demand is actually not substantially going down. Part of that is, again, due to the supply, and part of that is, there is an increased number of sort of the need for purchasing the house by young Generation G as well as millennial generations. So that's sort of coming up, and it's going to stay across about the same, at least if not going down for sure. But with that, as the new generations and the demand from new generations are going high, we all know that these generations are born in with digital technologies, mobile technologies. So customer experience becomes extremely important, as it was never before in the past, right? What that means is that both the bankers as well as lenders will have to provide services and products in a manner that is much more suitable to them, much more sort of by understanding their needs, by understanding their complete ecosystem of life events, as well as their background and their future financial predictions. So that's something which is extremely important, and that's something we are going to cover in terms of how we enable our clients get there in terms of customer experience. And then the second time is that none of these sort of none of us, as well as these generations, like to work with a mortgage life cycle or the timeline, which is going to be about 40, 50, 60 days, right? So there is a need to cut that timeline. And at the same time, banks and lenders also can't afford, because the business environment is challenging, competition is extremely high. So they want to make sure that they squeeze the operating efficiency so much that they can automate and reduce their operating cost as well as increase their margin. So those are the sort of two areas we are going to hit today. Obviously, there are regulatory considerations, in terms of making sure that there are fair lending compliance, etc. But the technology has evolved so well that it's now about the time that customers have started applying them and started seeing results with these technologies. So how do we help clients with transforming mortgage? I'm going to be very quick because we're going to go into details of each of these segments. So in terms of helping customers acquire, in terms of helping our banking and financial services clients acquire customers, we help with the entire marketing analytics and customer analytics processes, right? How do we increase customers' propensity to purchase a mortgage? Number of engagements that we are working with our clients. How do we apply AI ML technologies to do that, rather than helping with the sort of rules-based systems that were existing in the past? And then when it comes to origination and decision making, large part of that is about reviewing documents, right, which has been done manually. So how do we make sure that we reduce that back and forth between customer as well as the bankers and lenders in terms of submitting specific documents? And that's something which we can help with the classification techniques, and then extracting information so that when it goes to underwriters who's reviewing all the information about identification, income, to assess the risk and price the mortgage, the underwriters have complete information in a manner that help them make decisions very quickly. And wrap that all around with there were times about 2 to 3 years ago when nobody cared that much about, hey, my customer is going to go and refinance mortgage with other bankers or lenders. But today, protecting the mortgage portfolio is an extremely important thing for any bankers or lenders. So they're focusing on retaining customers. And what that means very simply is that how do you offer a customer a better refinance option before the customer starts shopping and going out and get that refinance with somebody else? So that's the sort of overall. And if you look at this whole solution, it's about enhancing the customer's lifetime value. It's about the improving operating efficiency, and that's what we are going to focus on today. With that, I'm going to hand it over to Vijay, who's going to cover customer and marketing analytics. Vijay, over to you.
Actually, we're going to go to a quick poll first. So diving right into customer analytics, let's run this poll here. The question of the poll is, what percentage of customers believe personalization in banking is critical? So we'll give you about 30 seconds or so to answer this poll. But the answers we're looking at, the options are A, 12%, B, 35%, C, 72%, or D, 83%. So again, what percentage of customers believe that personalization is critical? I'll give you a few more seconds to submit your answers, and then we'll review the results. So be sure to make your voice heard on this poll here. Okay. So, personalization is actually one of the hot topics. It has been for the past few years in fintech and banking. Obviously, customers receive that personalization in a lot of big tech systems that they use. Amazon's got it dialed in with Google. So they're used to having that type of personalization. And banks have severely lagged behind in creating personalized services and products for their customers. So with that, let's go ahead and go to the results here. I'll read them off. There we go. Okay. All right, so it looks like nobody said 12%. That is kind of low. As far as 35%, about 16% of the audience said that. 72% was the second highest. 33% of the audience said that. And the winner is 83% of customers believe personalization in banking is critical, and about half of the audience said that. So with that, I will hand things over to Vijay, who will begin his portion here.
Yeah. Thank you, Julie. Thank you,
Vijay,
Sanjeev, for setting the ground. Right. So the answer, the majority of people are saying that the answer is 83%. I am myself a little surprised that that's not the right answer. It's actually 72%, and it comes from a very detailed study. And even 72% is a pretty large number when it comes to the need of personalization. In today's day and age, as everything gets digitized, having personalized reach outs, personalized servicing, and personalized messaging to each and every customer becomes a prime requirement for any bank. Let's talk about the customer lifetime value as a whole, right? When we talk about enhancing customer lifetime value, what do we exactly mean? What we mean is we have to take each and every touch point that we have with the customer right from when we begin the journey by trying to generate leads, by trying to reach out to potential customers and bringing them into our funnel to when we convert them, when we are trying to process their loans, to even providing post-sales services and then trying and retaining the customers to ensure that they don't shop around for refinancing options outside. Now, if you look at this entire value chain of customers, there are different teams attacking different stages of your customer lifetime. Now, the important thing is to be able to bring all of this data together, understand the customer holistically, and then utilize that information to really take data-driven decisions. For instance, when it comes to lead generation, reaching out to the right type of customers, reaching out to the right type of audiences, which can be derived from your historical conversion data, is of prime importance. What type of messaging is going to help you actually convert that lead into a paying customer is the second thing that you've got to tackle. When you're doing the application processing and underwriting, understanding the 360 view, understanding the holistic profile of the customer to come up with the right type of offer for that customer is imperative. Once they do convert into a customer, you have to constantly keep checking on what their interactions with you are, what their sentiment is, what their payment terms are, and ensure that in an automated fashion you keep up with the customer requirements, such that the fourth part, which is retention, doesn't become an issue. While we also try and retain as many customers as possible, we also try to cross-sell and upsell various products within our portfolio. And all of this can be achieved by creating a customer 360 view. If you see some of the stats written on the right side, the data silos that banks have today and financial industry has today is the biggest issue. Solving for that is imperative. And there are multiple ways that could be solved for, but we want to present one way where Quantify achieves solving for the data silos. Actually, can we go to the next slide, please? Right. The solution that we're looking for is a holistic customer 360 platform, which is a customer data platform which can be built from scratch for organization. There is a distinct difference in the way we attack CDP as a solution, and that is actually created on this screen here right now. If we look at the entire disparate data sources function, there are multiple products that exist where you will be able to stitch data from certain sources. But today's digital transformation has created a very large amount of data sources, which sometimes are nuanced or even customized for a particular organization. The ability to bring all of that data together in a centralized data lake is very, very important. To be able to build out those custom ETLs, ensure that there is zero data loss, and build a very robust data lake is the first step to doing that. On top of that, Quantify applies its custom identity resolution algorithm, which is completely customizable to your requirements and the type of data that you have in your data lake, such that you form the customer 360 golden record in your system. Now, that customer 360 golden record can be used for a multitude of things when it comes to analysis. It can be pivoted into a data mart, which gives you various insights across the customer value chain, and you can actually visualize that onto a visualization tool of your choice. Here we have taken the example of Google Cloud Platform being your central data warehouse and central customer 360, and Looker being your visualization layer. What you can also do is you can create various data marts out of it, which can be utilized for advanced machine learning problems like customer segmentation. It can be used for doing analysis like churn analysis, predictive lifetime value analysis, propensity modeling, and recommendation engines, and so on and so forth. All of these solutions can actually come together and in the analysis layer, and then can be activated according to your requirement. The activation can be in terms of visualizing their entire journey, ensuring that you catch the nuances and insights that that data is generating for you, to even creating audiences that will help you read the right type of person depending on where they are in the value chain of their entire function. The biggest thing that Quantify is able to do is, while we're not an end-to-end product in this domain, each and every block that you see has been modularized and created into an accelerator. So when we actually deploy this for our customers, we take modules from each of these layers. For example, we've got connectors created for all of the disparate data sources. We've got more than 50 ETL connectors already created. We have a custom identity resolution module created. We have nearly 10 different machine learning models already created, which are deployable. Now, modularization helps us actually customize all of these implementations for you and bring it together into one platform on your choice of cloud. Let's go to the next slide, Julie. Right. Now, having talked about the ability to bring all of this data together and impact the customer lifetime value by doing analysis at each touch point, there are two options that each and every organization invariably goes through: whether they can go and buy a SaaS-based tool for a CDP, or should they build one. In our opinion, building over buying is the way to go, because as the scenarios change, your MarTech technologies, your ad tech technologies keep on changing, and the requirements that you have and the use cases that you want to build from it keep on changing on a regular basis. Hence, making a CDP which is tailor-made to your nuances is the need of the hour. Additionally, from a cost perspective, it's a one-time development and deploy cost, after which you get entire ownership of that particular system. You don't have to send data to any other system for analysis. It remains in your environment. It gives you the flexibility to add use cases, to change use cases, and it also gives you privacy in terms of customer data, because your data never leaves your environment. So the ability to build a customized solution which exactly fits your requirements, which is cost effective and gives you end-to-end control and ownership, and hence is completely compliant with data privacy rules, is the need of the hour. And that's why we believe that building over buying is the way to go for the future. All right, having said that, let's go through a couple of customer examples where we've been able to implement this solution. Julie, if you can move to slide number 17. All right. This is a customer notification platform that we built for a fintech company based out of US Central. The biggest issue that they had was their marketing team, who is not very tech savvy, who wanted to run a lot of campaigns and generate a lot of content and notify customers on a regular basis, was not able to do it in a flexible manner via a SaaS tool. The main issue there was that SaaS tool was not able to integrate data from all the sources. It was not nimble enough to really create audiences on the go for different types of different sets of rules. And our function was basically to change that for them. What we did for them is we built in ETL pipelines from their Salesforce Marketing Cloud, Google Analytics, Firebase, and MDMs. We created an identity resolution solution to actually stitch data across all of these data sources. We created a user interface that can be used by a non-coder and any marketing person to basically use very simple drop-downs to create rules for generating audiences. As soon as that audience was generated, from the backend, a query was generated. You use that audience and then pass that audience to various touch points. You could either run a Google Ads campaign, you could run a Facebook Ads campaign, you could send SMSs via Salesforce Marketing Cloud, you could send email campaigns. What was also automated is the ability to attach different content from your content management system in an automated fashion. So eventually, what this platform provided the fintech customer is a unique 360-degree view, which takes care of their digital as well as physical touchpoints, the ability to, on an ad hoc basis, via different rules, manage and generate audience and reach out to them via various channels, and overall have an improved ROAS and return on ad spend. Next slide, please, Julie. The second one that I would talk about is a very large mortgage firm based out of the US East. The main issue that this particular customer had was they had multiple data silos, and they were taking decisions based on different silos in different areas. That's why their ability to target customers was taking a hit, and their overall conversion rates were low. In this particular problem, what we were able to do is we were again able to stitch together digital journeys and physical journeys and close the gap between the disparate data sources, merge all of the data silos, and build three specific models on top of it. The first model was customer propensity. For all of the users that were not identified in the system, via their digital footprint, we were able to figure out whether there is a higher probability or lower probability of that customer purchasing a mortgage. That audience on a daily basis was passed on to the Google Ads campaign, where those customers were targeted on a daily basis. The second model was trying to predict the probability of someone refinancing their loan and the probability of converting a user from other competing mortgage companies to their mortgage company via a refinancing option. So we created audiences for refinances also on a daily basis and created a separate campaign for that. The third thing that we were able to achieve is a very accurate churn prediction model, where we were able to accurately predict the propensity for churn over the next 45 days. That gave the bank enough time to figure out the mitigating factors behind that churn, provide suitable offers, and try and retain those customers. As a whole, we were able to impact their conversion rates by a very, very big margin. And we were also able to achieve better than 25% increment in their refinance and churn models. So these were two examples, real world examples, where we were able to actually break down customer silos, bring the data together, and also build ML models on top of it to actually make a real world business impact for our clients. We will now move on to a demo. It's a 6-minute demo of the kind of systems that we've built for customers, which will give you a further idea of how this solution looks working in the real world.
Now, right off the bat on the home page, you see a customer 360 overview that talks about various metrics that analysts and marketers would like to see on a day-to-day basis. So things like your total unique customers, performance of all the various segments that you create using this demo, your user classification basis, their engagement and their transaction attributes and activities, as well as your traffic and conversions from your various sources. You can also see a bunch of marketing KPIs such as your end-to-end marketing conversion funnel, ROI from your various ad platforms, and also your channel-based conversions. And an amalgamation of all these type of attributes gives you your ROAS, that is for every dollar that you spend in marketing, what is the amount on revenue that it generates. Now, one thing to remember is that whenever we create this kind of solution for our customers, we make sure that we customize all the metrics and KPIs as per their requirements. The next thing that I would like to show you guys is the customer profiles. Now, I'm going to search for one particular customer, let's say Alex Perry. When I click on Alex, I see a detailed 360 view of Alex. Now I can see various historical attributes about Alex to give me an idea that what kind of customer Alex is. I can see all the identities of various data sources mapped to my golden ID created by the solution. And I also see a bunch of useful attributes that helps me gauge Alex as a customer. I can also see engagement history of Alex, where any sort of transaction related activity or event that has taken place is mapped here in a chronological sequence. This is pretty much it from the customer 360 profile. But when dealing with millions of customers, we want to create segments of customer and do aggregated analysis. And that is where segment analytics comes into the picture. Segment analytics helps you build segments based on your desired attributes. In this case, let's build a new segment. I'm going to call the segment as Finovate. I'm going to add description as a demo. And after that, I'll select the attributes on which I want to create this segment. So I'm going to select the first attribute as transaction amount. I want to make sure that all the customers in this particular segment must have made a transaction of more than $45,000. Another attribute that I want to add in conjunction is that the last engagement date of these customers must be between 3 to 6 months. And I can add one more attribute saying that all these customers must have a vehicle. Now, after I'm happy with all the attributes that I just selected, I can hit build and I can create simple or complex logics using various type of attributes and the various type of operators that are available. Once I select a particular logic, I can hit submit and I see a segment is built successfully. Now I see Finovate is a new segment that is created. I can click on that particular segment to see detailed analysis of this entire segment. I see that first of all, 633 customers were captured into the segment. I see that demographic information of the entire segment. So things like gender split, age variance split according to the gender, and also the location of these customers, where are they coming from. Then I see a bunch of aggregated historical attributes and ML attributes for the entire segment. Now, in this case, the ML attribute churn risk is pretty high, that is 63%. I want to double click on it and understand that who are the high risk customers from these 633 customers. So for that purpose, I'm going to go to ML Lab. Now, ML Lab helps you create models or run models without having a dependency on a data science team, just by creating models in a few clicks. So I'm going to select the segment on which I want to run a particular model. Once I select the segment, I have to select the objective. Now, the objective here was to understand the churn risk. So I'm going to select churn model. As soon as I click run model, the model that is pre-trained in the backend will get inferenced with the new segment that you have just created. And within a matter of few seconds, we'll have the insights ready with us. So it's that easy to run ML models on top of your customer segments. Now, in this case, I see a new churn file has been created. So I'm going to click on that. And I see that for every customer, I have the golden ID, their churn rate, a mitigation factor, and the churn time of that customer. Now, I can prioritize my high-risk customers using the filters to my right. Based on which I can understand that the most common mitigation factor is email reach out and offering competitive interest rate. Now I'm going to create a segment of these high risk customers and call them as high risk churn, and the description can be activate ASAP. Once I build this particular segment, I see that the high risk churn segment has been created. Now all I have to do is go to the activation path, select the segment that I want to publish. In this case, it's the high risk churn. Once I hit confirm, I see that I get an identifier availability graph for the segment. It basically tells me that for this particular segment, on which type of platform I'll get a maximum amount of reach. In this case, because I want to send them a personalized email, I'm going to select MailChimp, and I also want my contact center reps to reach out to them, and hence I'll also select my contact center system that's integrated with the solution. Now I'll hit publish segment to send this customer audiences to the individual ad platforms and the systems. Another feature of the demo or the solution is that you can pretty much monitor all the data sources that are getting ingested into this particular solution, and you can also monitor the destinations that are connected to this particular solution. And we also give you the flexibility to control your entire identity resolution piece by turning on and off various rules. And when you hit apply changes, the total number of unified records will reflect to those rules which are turned on. This gives you complete control of your identity resolution to give you the best matching accuracy possible. That's pretty much from our end. Thanks for watching the one customer or the customer 360 demo.
All right, from here, I will pass on to Milind to talk about our DocAI capabilities.
Absolutely. Thanks, Vijay. Thanks, Sanjeev. Very, very interesting topic and very interesting conversation. So overall on the trends, I wanted to start with some trends on the BFS document processing space. And the one big theme that we are seeing is overall usage, high adoption of modern technologies. Use of technologies like natural language processing, machine learning has helped to derive insights from semi-structured, structured, semi-structured, and even unstructured data from documents, images, and that adoption has been very high, and that's on the trend. That's what we are seeing. Intelligent document analysis uses various understanding techniques like text classification, text similarity, extraction, summarization. Text classification helps identifying the new document types properly. Similarity helps in identifying and removing duplicates. Extraction extracts data out of these documents to enable easy references and indexes. And then finally, summarization goes through all the different documents, summaries for large volume of documents in very short duration of time, and kind of gives you the descriptive analytics and predictive analytics and even prescriptive analytics. We are also seeing pre-trained models getting more and more advanced and specialized and even housed with some business context in them. Overall, integrated AI document technologies in scanning has reduced the data redundancy and a great extent of improved quality of data extracted from these documents. This helps businesses to classify, extract information efficiently, and plays a key role in effective decision making. Organizations are able to streamline their workflows and processes, which in turn reduces the cycle time and improves the customer satisfaction. As you see on the screen, from the point of submission of an application, documents can be automatically classified into their respective types, such as driver's license, passports, pay stubs, and so on. From that point, the data fields and the field values can be reliably extracted from these individual documents. We are also observing some great success from our pre-trained models and in on non-templated documents such as variations of pay stubs, employment verification letters, and even some handwritten document forms. This converts the tedious task of an underwriter of diligently checking and matching numbers to a reliably verifying just the risk related parameters, leading to enhanced operational efficiency, improved customer experience, and customer retention and repeatability. Let me show you with a real life case study. So a large firm in a lending space was faced with the problem of processing huge volume of identity and income verification documents, ranging from standard template documents such as passports, driver licenses, to non-templated pay stubs and employment verifications. Their process was prone to high error rate and had elevated personnel training times issue as well. We built an end-to-end pipeline for them, leveraging some of the most powerful parsers, and that led to really some of the awesome results. We built models to reliably classify more than 330 document types, with an average accuracy of 99% and about 79 million pages we have already processed on these numbers. Entities were auto-extracted from more than 32 document types with a field level, at the level of fields, field level accuracy of 85%. The workflow was seamlessly integrated into their post-processing systems and downstream applications, and has reduced the fastest time to process loan applications from about 3 days to a mere 7 minutes. Now that's the power of AI. And um, with that, we are also enhancing the system to even further improve the models. One of the beauty of the models is it actively learns, and based on the business context, it will also auto correct and be better and better over a period of time. With that, I'll take a pause and I'll hand it over to Sanjeev.
Great. Thanks, Vijay and Milind. One of the things I can definitely say from my conversations with hundreds of clients, both of these areas have seen increased adoption. These days, in any conversations I'm sitting with clients, they're talking about how do we apply AI into customer analytics? How do we understand our customers better? Do we have enough data at this point in time to be able to understand, or do we need to sort of get more information about our customers? So that's the conversation. Um, what they are saying is that our rules-based marketing systems are great. I mean, they're working, but what they're not helping us is being competitive. What they're not helping us in, customizing the journey as per what customers need, and that's where marketing and customer analytics, leveraging AI is extremely important. And on the second side, document processing, this how many times COVID has really accelerated this, right? I mean, if we all applied for refinance or new mortgages from our homes, we submitted the digital documents, and on the other hand, folks sitting at the back of the screen processing those documents, they were at home, and banks and lenders saw increased needs for at least minimizing that workload There's a challenge about the great resignation and the staffing shortages, etc. They are all sort of leading into these automations, which are extremely important for banks and lenders. So one of the questions we often get asked by our clients are, where do we start from, right? I mean, you're talking about the entire end-to-end mortgage transformation, but obviously, if you look at large banks, these processes span across multiple organizations. You have the from technology perspective, CIO organization is in place. From the marketing perspective, you have CMO organizations who are managing this. And then from the perspective of the document automation or the operations, you have the entire mortgage operations team that's sort of doing that process. And then obviously at the end, underwriters who have to assess all the risks and make sure that make the decisions on mortgages, right? So where do we start from? Obviously, there are no sort of straightforward answer to these questions. It is always, it depends on where you are in your digital transformation journeys, how you are set up as an organization. It's a different answer for banks versus a non-bank lenders versus a fintech organization, because large part of transformation requires some of the organizational adoption, and depending upon how you're organized, it becomes a challenge. So how do we address that? As a service provider from Quantify perspective, what do we bring to the table? So what we do is help our clients understand their landscape and develop better appreciation of where they are in the journey. We look at the current state of the entire mortgage landscape, and then we sort of understand from clients' perspective where they want to go. What's the sort of immediate challenges you have? Are you facing the challenge in terms of your customer attrition, or you are really facing challenges on the mortgage operation side in terms of shortage of staff or automation, or sort of error as well as speed of information processing? So those are the kind of trade-off we do in terms of looking at the current state as well as developing the target state for our clients. And then based on that, there are a bunch of AI use cases, as you have seen, right? On the customer and marketing analytics side, there are a number of use cases. On the document side, there are a number of use cases. So we list all the AI use cases in the AI, mortgage digital transformation space. And then based on understanding where clients are in the journey, what's the immediate pain points and how they're organized, what would sort of, drive the change within the organization, we prioritize those AI use cases, and then we go and, help clients with a starting point. And obviously, something we call ideation workshop. That's what helps us identify key use cases. Again, the duration of this workshop can be a couple of weeks to 6 weeks, depending upon you as an organization and the size and the complexity and everything. And then that helps us not only give you the prioritized use cases, but also develop the initial return on investment theme in terms of what are the benefits you are going to see, what's the sort of cost that you will need to incur, and how that's going to sort of evolve as a roadmap, right? Because we don't want our clients to undertake a huge engagement. We want them to fail early and fail fast by developing some of these use cases and seeing whether they are really creating the business value within the organization. So that's how we start. That's how we help our clients start. It's all about finding a point with the right trade-off of the complexity and benefits, and that's what we do with the help of the workshop. So that's where and I'm going to sort of move on to the next slide and open it up for question and answer.
Okay, great. Thank you so much to Sanjeev, Milind, and Vijay. We will be moving on now to our question and answer session. So to our audience, if you do have questions, feel free to submit them in the chat box. I'm going to go ahead and go through some of the questions, and it looks like none of these are directed to anyone in specific. So Sanjeev, Milind, and Vijay, I'll just let whoever feels most comfortable take the answers. Okay, and again, reminder to our audience, please do submit your questions. If you do have questions or a question that you don't really feel comfortable submitting publicly, we will have contact information for all of our presenters here that you can follow up with after the fact in private. So moving on to the first question. First says, if we have on-prem systems, how difficult will it be for us to implement customer analytics?
Maybe Vijay, you can take it up.
Vijay, you're
Yes,
on
I
mute.
started speaking on mute. Yeah. Yeah, I was going to take that question anyway. So yeah, traditionally, all of the customer analytics solutions have been on-prem. What the main difficulty for that has been the ability to connect to various data sources at one time and the ability to also activate it efficiently. Secondly, the ability to scale as your data scales is something that becomes an expensive affair. What a public cloud system has been able to do is it's able to, from a compatibility perspective, connect to most subsystems much easily, able to auto scale much easily, and also create an environment where you can have multiple people access those systems with much ease. So as long as capabilities is concerned, on-prem systems can facilitate customer analytics, but the efficiency of doing it on a public cloud system is unparalleled. And that's why our suggestion would be to modernize the customer analytics infrastructure that you have, and then start investing in a public cloud system to build that analytics base for your organization.
Great. All right. Thanks, Vijay. All right. Second question here. How versatile is the machine learning model for doc processing, and can it be used in other business units?
Yeah, I can take that. So yeah, the models are pretty versatile. I mean, you start with similar base models configured for your specific document types. At the same time, we have also seen over a period of time, the model itself learns on its own, and that's the beauty of these ML models, active learning. They get graduated, they get sophisticated, they understand your business context and different documents. What are anomalies? A particular anomaly in a particular business flow may not be an anomaly in the other flow. So yes, they can be applied, but at the same time, we have seen the highest benefit when you allow the model to sophisticate over a period of time for a very specific workflow.
Right. Great. Thanks, Milind. Next question here. Can the automated doc processing model work on a hybrid cloud model?
Absolutely, yes. So all our predictive models are actually cloud agnostic. Our system integrates within the ecosystem that you have and connects to and interacts with different softwares and even infrastructure that is in place with currently, right? So that's where, as Sanjeev was saying, the initial workshop kind of helps into understand and discover what are the nuances of from this business requirement standpoint, but also from how do we implement standpoint. So yes, absolutely. Answer is yes. There needs to be some kind of discovery in place for how do we lay that roadmap of digital transformation in place.
Great. Okay. And this one looks like it is for international listeners. It says documents for mortgages differ across countries. What does it take to train the model for documents in different countries, such as the UK or Canada?
Sure, certainly. So the across markets, what we see in mortgage applications, documents, there are two types of documents. One of the set of categories is ones which follow similar patterns, which such as driver's license, passports. They don't vary too much, but there are variations. What we call them is actually we term it as variations or sub-classifications. These typically are very easy to train, and the model will almost always pick up all the nuances, all the fields, values correctly, accurately, with some minimal changes or tweaks. Then there are other types of documents which are coming from different disparate systems. For example, tax systems, which are fundamentally different. Although they have similar content or similar context, they are fundamentally different when you go from country to country or markets to different markets. That's when the models need a little bit longer time. But again, that's not significantly new model. So the model kind of adopts to that as well. But yeah, I mean, that's those are the documents or those are the flows where you need a little bit more amount of time to get trained.
Great. All right. Well, looks like there are no more questions left in the chat box. So with that, I'd like to thank Quantify and our speakers today. We've had Sanjeev Sethi, Head of Banking and Financial Solutions for Quantify, Vijay Mannur, Head of Marketing and Analytics, and Milind Wasaikar, Client Service Executor for Quantify. Feel free, to our audience, feel free to contact them using the contact information on the screen as you see right here. Or you can also contact them via LinkedIn or get in touch with them at applieDai@quantify.com. And thanks so much to you, our audience, for your time and attention. We hope to catch you again soon. Thanks.